Hi, I'm Jacqueline Eckern with Eating Disorder Hope. Thank you for attending our inaugural online conference. We are very pleased to have our next presenter discussing the 2018 Behavioral Health Business Forecast and Climate Overview for Eating Disorders and Addiction Treatment. We have McNeill Wester with us. He is the Managing Director with Coker Capital Advisors. He brings nearly 2 decades of investment banking and legal experience to the firm. Prior to joining Coker, McNeill worked for middle market companies, worked in investment banking with a focus on executing mergers and acquisitions with middle market companies at McColl Partners and Fennisbrook and Company, where he served as managing director, general counsel, and founding partner. McNeill also practiced law at Moore and Van Allen, where he advised clients on corporate and securities matters. So he will be presenting today. He has kindly shared his PDF version of this presentation, so you'll be able to have a copy of that. And you'll also be able to pose questions to McNeill during this conference. If we're able to address them during this time, we will. If not, McNeill will respond within about 24 hours to you personally. And with that, I'd like to introduce McNeill.
Thank you, Jacqueline. Good day to everybody. I'm glad to be with you to talk a little bit about the market. As Jacqueline said, my name is McNeill Wester. I'm one of the partners here at Coker Capital Advisors. We have offices in New York and Charlotte and Atlanta. And I am speaking to you today from our office in downtown Charlotte. Our firm, for those who are not familiar, is a healthcare and investment bank. Now, for those who aren't familiar with an investment bank, let me just give you 30 seconds on that. We neither make investments nor are we actually a bank. What we really do is provide advice, mergers and acquisitions advice, mostly to owners of businesses, a lot of whom operate businesses and own businesses in the behavioral health space. We focus all of our time on healthcare, so it's not all behavioral health, but a good portion of the work that we've done historically has been in the behavioral health sector. And we'll go ahead and jump into the presentation here a bit. And if you look towards the bottom of the screen here, you can get a little bit of a sampling of the type of work that we've done. And again, you will see probably some names that are familiar to some of you that are in the behavioral health sector. And we can give you a little bit more detail on this page. For those following along, it's slide 5. A little more detail on what some of these companies did in the behavioral health sector. You'll see there's a pretty nice mix of businesses that are in the substance abuse treatment area and several that are in the eating disorder treatment area. I think those are the two, for our audience today, probably the two most relevant subsectors of behavioral health. And we've been pretty active in both. The columns on the left listed as target, those are our clients. So for us, we've represented owners of these businesses as they have either sold their businesses to third parties, which are those listed on the far right, or brought in those groups as investors for their business. So that's the very high level on who we are and what we do. I thought that we would just sort of jump in to the market right away and give you a little bit of what we've seen recently, which I think is a pretty good indication of what is likely to come in the coming year as we begin to round out 2017. As you can see from the statistics here on this page, the behavioral health industry is a large industry, and it's still growing rapidly. Currently, it's a $64 billion industry. And it's projected to grow at about 3.75% per year for the next several years. So it's large and getting larger. The addressable market in behavioral health is enormous. The behavioral health conditions, as everyone here today knows, are highly prevalent and there are far too many people out there who need help, who are able to get it. The market is growing. That addressable market, that is, the patient population in need of services, is growing. Substance abuse has now reached an epidemic proportion as declared by the White House recently. It is the drug-induced deaths are the leading cause of accidental deaths in the U.S., which has eclipsed car accidents for that unfortunate distinction. So we have reached epidemic proportions. More people needing help, not enough people getting it. Eating disorder treatment is sort of the same. Very significant number of folks who need the help, and less than 1 in 10 who actually need it are getting it. Let's click ahead here to slide number 8. Behavioral health is interesting. It's a broad industry, from the patient demographics that are served, to the conditions that are treated, to the different settings where treatment is provided, and on down to the source of funding, the different types of payers that we have in the marketplace. Behavioral health affects all types of people. As you can see, we've listed here. It's something that affects adults, children, adolescents, senior citizens, and there are all sorts of conditions that are treated and need to be treated. And they can be provided in all sorts of different types of settings, which is something we'll talk about later, because that's interesting to folks in the market as they're thinking about investing in various behavioral health treatment businesses. Lastly, and an important piece of this is the payer dynamic. We've got all sorts of different people paying the bills for this type of treatment, and that's another very hot topic that we will cover here as we move forward. We work with companies that operate within almost all of these various buckets, and the first question that a lot of folks ask us when they're thinking about doing something in the capital markets, something involving mergers and acquisitions, is simply, do I want to consider bringing on an investor? And that's a question that's really a personal question to the individual owner of the business and the operator of the business. So we're not going to spend a bunch of time on that today. But many of our clients who are interested will cite the attractiveness of the liquidity. It's a way to bring on considerable personal wealth. And it's also an opportunity, and this is cited as an important reason as well, is to grow the business. A lot of providers have essentially maxed out what they can do as independent operators and believe that if they bring on a financial partner, they'll have the capital necessary, the money necessary, funds necessary to really grow the business and hopefully be able to reach out and help more people. So the second question that folks ask is if so, if I am interested in doing this, what would or would not make my particular business attractive to the market? And so let's flip ahead and talk about that for just a moment. I think the first thing worth mentioning is size and scale. There are investors out there, all different types of investors, and so most businesses, if they're providing quality care, can find somebody who would be interested in making an investment in the business. But generally speaking, for something to be broadly appealing in the marketplace, it needs to have enough size and scale to be relevant to a broad market, and something that really be worth the while of the investors to spend time investing in. For providers who are too small, it's hard to get a whole lot of attention that you would like to have on the business as you're thinking about it. So that's just sort of a quick word that probably applies broadly across healthcare, but I think is worth mentioning here. Now, within behavioral health, there are a couple of other critical factors to think about as you consider whether your business would be something attractive in the marketplace. First, we'll talk about payer dynamics. There is an increasing attractiveness of businesses that are in-network. So they have in-network contracts with payers. There is some interest still in businesses that are out of network, but the general sense among the investment community is that eventually those payers will feel increased pressure to move in network, or will perhaps have trouble getting reimbursement at all. And so the pressure is going to be downward on the higher rates that those out-of-network providers tend to get, and that eventually the profitability of those businesses will shrink, and as a result, they'll be less attractive to investors. So the idea of an in-network business connotes stability. Investors get a sense that wherever the rates are right now, they're likely to stay there for the foreseeable future. We also see providers out there who are self-pay providers, where the patient is providing most of the funding personally, aside from insurance. That's a model that can work. We tend to see those providers as being more high-end, tend to be more luxurious type settings. There is a market for that, but investors tend to be particularly attracted to providers who can provide treatment for a large swath of the potential market, and that tends to be folks who do accept in-network commercial insurance. And the last thing to mention, we'll get into this here, is lower cost settings. Whether you provide insurance or not, whether you accept insurance or not, rather, the lower cost settings again are viewed by the market as a more favorable investment to make. Second thing is outcomes data. There are a lot of providers out there, obviously, who are very sold on their particular method for treating patients. For those providers who have measurable data, data that they can point to directly that shows the effectiveness of the treatment they're providing, are going to have an advantage in the market in the eyes of investors. The general sense is that the payers very much like to see the positive results, so they feel like that the resources that they're dedicating from a payer perspective to that treatment is actually getting the desired results. And so that's I think an increasingly important factor, and something we're hearing a lot about from the investment community. Number three, clinical reputation and the model. This is probably mostly common sense, but the reputation of the provider is critical. Investors spend a lot of time, if they're not already familiar with the provider, trying to get to know the provider's reputation. It's important for a couple of reasons. One, providers who have a strong reputation often provide the most high quality care, which at the end of the day is what all of this is all about. Secondly, the industry thought leaders are oftentimes folks who will receive more referrals from other providers. So someone who focuses, for example, in eating disorder treatment, if they're viewed as a thought leader and a real leader in the marketplace, are more likely to get referrals from other behavioral health providers who may not specialize in that particular area. So reputation can certainly affect the bottom line, and investors are certainly attuned to that. Fourth, continuum of care. This is an important factor, I think, for two reasons. First, the idea of being able to treat patients from the most acute settings and then stepping them down along the way is a good way to ensure successful outcomes, which, as we talked about before, is a big issue in the eyes of investors. Secondly, since patients are going to need care up and down the continuum anyway, investors are attracted to providers who can essentially get a hold of that entire spend for that patient, whether they're in the most critical phases of care or the more outpatient, less acute type settings. The fifth and final piece that I think is important to mention here is track record of growth. Any investor who's investing really in any type of business, but certainly true here in behavioral health, is the importance of being able to grow the business. They're not going to come in and invest a lot of capital if they don't think that they can grow the business and at some point realize that investment as a successful turn on their dollars. So a provider who has shown that they can grow the business, add locations, move into new geographies, etc., will benefit significantly from the view of the market. Let's click over another slide here to number 10. As mentioned at the outset, the mental health market in this country, the market is huge. The population is underserved, and the problem is growing. Behavioral health, however, is not immune from the question about who pays. And we touched on payers a bit on the previous slide. But payers, like in any market, want the most effective care. They want to avoid recidivism when they possibly can, and they want that care at the lowest possible cost. So a big part of what we're seeing, and the point that we'll really stress here on this slide, is a push towards lowest cost settings. And we mentioned that at the outset. Worth mentioning here again, oftentimes the market is viewing outpatient treatment as the lowest cost option. And so the market is responding with increased interest in providers who either provide all of their care on an outpatient basis or at least have a significant portion of their care provided in that type of setting. Flipping over to 11. Despite the pressure from the payers, there is some good news. More people now have access to care than they have before. The Parity Act that was passed a number of years ago has increased the coverage for mental health treatment, and Obamacare has increased the number of patients who are actually covered. So the combination of the two has certainly increased access to the type of treatment that most of you are providing. We have a stat here that in 2015, 17 million people gained insurance coverage, resulting in 15 to 23 billion more in annual behavioral health spending. So we've seen a real spike in that, and where those dollars go, is often where we see investor interest go as well. A few more thoughts here, getting in specifically about a couple of the subsectors we talked about. Substance abuse first. This is a sector that is obviously in the headlines. As we mentioned before, the White House declared the opioid addiction as a national epidemic. And we also mentioned drug-induced deaths are now the leading cause of accidental deaths in the country, which eclipsed car accidents for that designation. Again, though, what we have is a significant supply and demand imbalance. Only about 11% of those needing treatment are receiving care. So we have an enormous addressable market and still a relatively small number of providers providing that treatment. As many of you know, most of the providers who are providing that treatment tend to be fairly small. And investors see that as an opportunity. If they can make an initial investment of some scale, there's an opportunity to merge with or partner with some of the other providers out there who may be smaller to build larger overall platforms to reach more and more patients. With respect to eating disorders, it's a little bit of a similar story. This is an underserved population, a relatively low number of providers versus the population that is affected. We have seen, of course, a continuation in the trend of who's affected by eating disorders. Young women continue to be those who are most often plagued with this category of condition. And the opportunity for a provider who can provide high quality care in a cost-effective setting, and I think those two items paired together are critical here, are going to be significantly and substantially attractive to the marketplace. Jacqueline, that's sort of the items that we wanted to cover. I'll invite anybody who has questions, Jacqueline, you and anyone else who's attending here to ask any questions, and we'll do our best to address them.
Excellent. Thanks, McNeill. Very interesting. So we do have some questions from the audience, and one is about parity, and with the shift of leadership in the White House, how will that impact the demand, in your estimation, for behavioral health care in 2018 and beyond?
A question that we're asked very often, and a hard one to answer. It's difficult to predict. I'm not even sure Congress knows what it's about to do next. We certainly don't have the crystal ball on that. We generally are not particularly concerned about it. We find that most of our clients are not either. For all of the reasons that we've described today in terms of the epidemic that we have going on, the idea that we were to retreat from being able to provide the type of treatment that we need, clearly, in our view, runs contrary to public interest. We think that the ball has begun rolling pretty quickly downhill, showing that treatment for these conditions is needed, and somebody has to pay the bill. If it's not going to be from commercial payers, then you're going to obviously have to look to governmental reimbursement for that. And we think the likelihood that the government decides that they want to shoulder that burden is fairly low. So we believe that the supply and demand will continue to tilt this in a favorable direction for the providers out there.
Interesting. And another question is, if the program is looking to find an investor, possibly be acquired, how can they do that without letting the overall marketplace know that they're seeking an opportunity?
Sure. In almost every case, when we represent a client, we are reaching out on a no-names basis to the marketplace. So we're presenting the opportunity with a general description of what the business is and what it does, who they treat, maybe where they are, but we don't provide enough specifics that anyone receiving that information can tell who they actually are. And so from there, we identify the folks, the potential investors who are most interested, and then proceed with a confidentiality agreement for that limited number. That way, anyone who's actually learning the identity of the company is going to be someone who signed a legal document, a contract that says that they will not disclose the information that they learn about the business. But even before you get to that, will not disclose that they know the business is considering perhaps a partnership in the market. So it's done on a very controlled basis, and if you control the information, you can oftentimes limit the leakage of that sort of information.
Interesting, thank you. Another question is, are there any books or particular publications you would direct people to follow over the next few years to try to chart the marketplace?
It is, I mean, for the overall marketplace, is not a very original answer, but the best place to turn is the Wall Street Journal for general market data. That's what we use. And it's as good a source as anything else. If you're looking for specifics on the healthcare market, there's certainly a number of publications out there. We produce on a monthly basis, and it's available on our website, www.cokercapital.com, a monthly newsletter that will track the conditions in the healthcare M&A market and also highlights individual subsectors, and we've highlighted various parts of behavioral health a number of times. Sources like that are good places to get very specific information about the healthcare M&A market.
Great. We'll make sure to provide the URL for where you can sign up for that newsletter, the monthly newsletter by Cobra Capital, for the individual that posed the question and anyone else who's listening that would like to get a monthly update from you on that.
Sure.
Well, this was excellent, very fascinating material, and we really appreciate your time.
Thank you, Jacqueline. Thanks so much for having me.
All right, have a great day. Take care.
Bye-bye.